Let's get back to the cost of living crisis, and inflation figures out today show the annual rate has fallen to 3.6%, still above the Reserve Bank's target range of 2 to 3%, but it's actually risen 1% over the last quarter. And rent, education and insurance costs are continuing to soar. Treasurer Jim Chalmers was trying to sell the good news, repeating the same old lines.
Inflation has now almost halved since we were elected a couple of years ago. It is still too high. People are still under pressure, but we are making some progress.
Let's bring in Gigi Foster, economics professor at the University of New South Wales. Good to talk to you again, Gigi. Sure, inflation is down, but a little higher on these numbers than many were expecting. Is there any possibility the next move of interest rates could actually be up again?
I definitely think it could be, yes, Chris. In fact, I was saying that a couple months ago, because remember, first of all, it's the RBA more than the Treasurer who is responsible for inflation coming down, because they have been racking up the rates, as you know, for a while now, even though they started a bit late after the pandemic fiscal stimulus. But the RBA doesn't only look at the inflation rate when deciding what to do with the cash rate, right? It's also going to look at other signals of economic heat. So, for example, the labor market and things like the iron ore price and lots of things that affect the housing market, things that affect consumers. Yeah. And certainly the labor market is looking pretty good right now. We're converting some part-time jobs into full-time jobs. Employment's going up. The unemployment rate is pretty stable and pretty low by historical standards. So the RBA will be looking at those things as well to work out how much heat is in the economy that they would want to take out with increases in rates. So I think it is possible, although probably not on balance the most likely thing, that the bank will raise rates again this year.
Yeah, well, this is another reason why the looming budget is going to be even more important. And with that in mind, to what extent is the government actually fueling inflation rather than fighting? And I'm thinking about, uncontrolled spending in an area like the NDIS and the way that electricity prices are running rampant. Is this actually fueling inflation?
Of course, yes. When the government props up industries, for example, through subsidies, including the green energy subsidies that are being taken into our legislation through this Made in Australia policy, for example, that's putting more money into the economy, just like the fiscal stimulus during COVID. And of course, that means that we're not spending that money on other things. And unfortunately, the Australian public are quite wrapped with this idea that in order to get things happening, the government has to spend. Even economic students often think that's the only answer to an economic problem. Well, the thing is that isn't the only answer. Sometimes the government needs to get out of the way and focus on its core business. And that is less expensive for the government, but of course means fewer government jobs potentially. And so, bureaucracies don't like that direction. So I think that's the problem, is that we do have a bit of this cultural embedded belief that the government has to be the ones to fix problems rather than the market or the private sector.
Yeah, to a degree, you've preempted my next question, because this is the issue. My view is that the best way to promote productive economic growth is to get rid of red tape, to reduce taxes, to try and get energy costs down, make sure you've got plenty of affordable, reliable energy, do all those sorts of things. But instead, the Labor government is coming out with this future Made in Australia policy, where they're going to pump more of our taxpayers' dollars into certain industries, handpick the winners, they think. They're even going to try and direct the big super funds to direct more of our money into their chosen schemes. How worried should we be about this? It looks disastrous to me.
Yeah, it looks like a train wreck to me as well, Chris. And unfortunately, it has all the hallmarks of both what's just been done in the US with the Inflation Reduction Act, again, a piece of legislation whose label does not match the meat of the legislation, and also, frankly, of the COVID lockdowns, where, again, we were told there's going to be this big sacrifice up front and it's for the good of everybody and you're saving people if you do it. But then, as it turns out, the benefit that you get is kind of comes out of a computer model and doesn't happen for a while. So it really doesn't stack up in terms of the cost benefit analysis type evaluation that, back when I was young, that was how we evaluated government policies. We didn't just kind of magically say to people, well, you're going to get some benefit that I can show you from this model if you hurt yourself a lot today. And so it has the same hallmarks. I am very worried, and I think unfortunately we're going to have to wait until the whole thing comes kind of crashing down and reality bites and the inefficiencies become apparent of this policy, and the Australian people are going to need to resist.
It is a huge worry, this Future Made in Australia issue. I want to come back to you in the future and talk about it in more detail. Thanks so much for joining us, Gigi.
For sure.